Leaving the European Union would tip the UK into a year-long recession, with up to 820,000 jobs lost within 2 years, Chancellor George Osborne says. Publishing Treasury analysis, he said a leave vote would cause an immediate and profound economic shock, with growth between 3% and 6% lower. David Cameron said it was the self-destruct option for the country. But Boris Johnson dismissed the study as more propaganda from the Remain side, which he claimed was rattled. Former Chancellor Lord Lawson accused the government of trying to scare the pants off voters, while Brexit-supporting economist Patrick Minford said the assessment ignored all the upsides from leaving, including the money saved from not being a member of the Common Agricultural Policy and not having to abide by EU regulation. The BBC's assistant political editor Norman Smith said the Treasury report on the economic consequences of leaving, which comes 1 month before the vote on Britain's EU membership on June 23, was even gloomier than had been predicted. The Treasury's cautious economic forecasts of the 2 years following a vote to leave, which assumes a bilateral trade agreement with the EU would have been negotiated, predicts gross domestic product would grow by 3.6% less than currently predicted. In such a scenario, it suggests sterling would fall by 12%, unemployment would rise by 520,000, average wages would fall by 2.8% and house prices would be hit by 10%. A second, severe shock scenario, also modeled by the Treasury, predicts what would happen if Britain left the EU's single market and defaulted to World Trade Organization membership. In this scenario, after 2 years GDP would be 6% lower, up to 820,000 jobs could go, take-home pay would fall by 4%, house prices would fall by 18% and the pound would be 15% lower. On a visit to B&Q's head office on the South Coast, Mr. Osborne warned voters not to choose a do-it-yourself recession for Britain. The British people have worked so hard to get our country back on track. Do we want to throw it all away? He said the analysis had been peer-reviewed prior to publication by Charlie Bean, a former deputy governor of the Bank of England, and that the Economist had said it was based on reasonable estimates and best practice procedures. Mr. Cameron said the report chimed with other analysis by institutions such as the Bank of England and the IMF, likening a decision to vote for EU exit, so soon after the last recession, to surviving a fall and then rushing back to the cliff edge. The Treasury says it modeled the impact of a leave vote by looking at 3 key factors: the transition effect of the UK becoming less open to trade, the impact of uncertainty on the economy, and the potential volatility of financial markets. A previous Treasury report, which looked at the long-term effect of an EU exit, claimed households would be £4,300 a year worse off, and the economy 6% smaller by 2030. The Vote Leave campaign said the worst-case scenario painted by the Treasury was bleaker than the Great Depression of the 1930s, and the Treasury had been hopelessly wrong in previous forecasts, including in its support for the exchange rate mechanism in the early 1990s. Former Cabinet Minister Ian Duncan Smith said he did not believe there would be any economic shock from leaving, citing economists who have argued the economy would be able to add nearly 1 million new jobs by negotiating new trade deals. Every Treasury report has a central presumption from which there are downsides and then there are upsides, he told Radio 4's Today. They have chosen today to only produce the downsides, that makes this report categorically unfair and biased. I don't think that downside exists for the UK. There was not one word about the risks of remaining, the former Work and Pensions Secretary added, and by ignoring this the government was misusing its power and misusing the civil service. Mr. Duncan Smith said he was deeply disappointed that his former colleague Sajid Javid was among those defending the report, suggesting he had heard the business secretary say privately before the referendum was called how much he wanted the UK to leave the EU. Sources close to Mr. Javid have denied this. The business secretary, who has acknowledged he wrestled long and hard before deciding to back Remain, earlier told Today that EU membership benefited UK business as the UK was in the single market but outside the Euro and the Schengen border-free zone. But John Mills, the chair of the Labour Leave, said the Treasury's economic warning was grossly exaggerated. While there might be a small blip in the immediate aftermath of a vote to leave, he said the economy would soon recover to a higher level. These wild claims we hear from the Remain side do nothing to help their cause, he told the BBC News Channel. And as the economic arguments intensify, Grassroots Out, which is campaigning for the UK to leave the EU, has suggested Brussels will lay siege to the City of London in the event of a vote to remain, with wave after wave of new regulation.